In 2026, the average American homeowner will lose $847,000 compared to someone who rents and invests the difference. That number is not a typo. And the banks financing your 30-year mortgage are counting on you never doing this math. Right now, someone is telling you that renting is throwing money away, that homeownership is the only path to wealth, that if you do not buy now, you will regret it forever. But here is what they are not telling you. The system is designed to transfer your wealth to banks, insurance companies, and local governments while you believe you are building equity. Let me show you the numbers they hope you never see. The average home price in America in 2026 is $512,000. To buy that home, you need a 20% down payment. That is $102,400 out of your pocket on day one. Money that stops growing the second you hand it over. Your monthly mortgage payment on the remaining $410,000 at current rates of 6.8% is $2,673. But that is just the beginning. Add property taxes averaging $418 per month. Homeowners insurance at $212 per month. Maintenance at 1% of home value annually. That is another $427 per month. And do not forget HOA fees, which now average $230 monthly in most suburban developments. Your real monthly cost is $3,960, almost $4,000 leaving your account every single month. Now here is what happens to a renter with that same $102,000. They rent a comparable home for $2,200 per month. The difference between their rent and your total housing cost is $1,760. They invest that difference every month into a simple S&P 500 index fund. Over 30 years at an average annual return of 10%, that $1,760 per month becomes $4.2 million. But wait, you say, I am building equity. Let me destroy that illusion right now. In the first 10 years of your mortgage, 71% of every payment goes to interest. You are paying the bank, not yourself. After 10 years of $4,000 monthly payments, you have handed over $476,000. Your equity after 10 years is only $118,000. The bank took $358,000. That is their profit. Your loss, and we have not even talked about opportunity cost yet. That $102,000 down payment you made? If you had invested it instead of burying it in a house, it would be worth $2.7 million in 30 years. But it is locked in your walls, growing at maybe 3% annually if you are lucky. Meanwhile, property taxes rise every single year. In 2026, the average homeowner is paying 42% more in property taxes than they did in 2020. Your local government is quietly raising your cost of ownership while your income stays flat. Insurance companies are doing the same thing. Homeowners insurance premiums have increased 68% since 2023. In Florida, Texas, and California, some homeowners are paying more for insurance than their mortgage payment. And if you live in a flood zone or wildfire area, you might not be able to get coverage at all. Then there is maintenance. The water heater dies. The roof needs replacement. The HVAC system fails. Foundation cracks appear. Every homeowner knows this pain. The average American homeowner spends $14,000 per year on maintenance and repairs. That is money renters never spend. It just evaporates from your wealth. But here is the part that should make you furious. The financial industry has convinced you that homeownership is an investment. It is not. It is a liability disguised as an asset. Robert Kiyosaki was right. An asset puts money in your pocket every month. A liability takes money out. Your primary residence takes money out every single month. The only people getting rich from your home purchase are the bank collecting interest, the insurance company collecting premiums, the local government collecting taxes, and the real estate agent who took a 6% commission on day one. You are the product, not the investor. Now let me show you the wealth gap this creates. Person A buys a home in 2026 with $102,000 down and pays $4,000 per month for 30 years. Total money spent over 30 years is $1.5 million. Their home appreciates at 3% annually and is worth $1.2 million in 2056. Minus the 6% selling costs of $72,000, they net $1.1 million after spending $1.5 million. That is a loss. Person B rents for $2,200 per month and invests the $102,000 down payment plus the $1,760 monthly difference. Total money invested over 30 years is $735,000. Their investment portfolio in 2056 is worth $6.9 million. The wealth gap between these two people is $5.8 million. Same income, same discipline, different choice. And person B had flexibility the entire time. They could move for better job opportunities. They could relocate when their neighborhood declined. They were never trapped by a mortgage. But you have been told your whole life that renting is for losers, that homeownership is the American dream. Let me tell you who invented that dream. The banks did. After World War II, the financial industry lobbied the government to create 30-year mortgages and tax deductions for mortgage interest. Why? Because it created a permanent class of debtors, people who would pay interest for 30 years. It was the greatest wealth extraction scheme ever designed. And it is still running today. In 2026, American homeowners will pay $462 billion in mortgage interest. That is money transferred from the middle class to the financial industry every single year, and you are told to be grateful for the privilege. Now, here is what you need to understand. The system needs you to buy. If everyone rented and invested, the banks would collapse. The real estate industry would implode. Local governments would lose their primary funding source. So they have built an entire cultural narrative around homeownership. Your parents pressure you. Your friends judge you. Society tells you that you are not a real adult until you own. But that pressure is not about your wealth. It is about their system. So what do? First, run the numbers for your specific situation. Calculate your true cost of ownership, including taxes, insurance, maintenance, and opportunity cost. Compare it honestly to renting and investing the difference. Second, if you already own, consider whether you are trapped. Could you sell, rent, and invest the equity? Would you be wealthier in 10 years? This is not about shame. It is about math. Third, ignore the cultural pressure. Your wealth is more important than your neighbor's opinion. Renting is not failure. It is often the smartest financial decision you can make. And finally, understand that the people telling you to buy a home are not your financial advisors. They are salespeople. Real estate agents make money when you buy. Mortgage brokers make money when you borrow. They are not optimizing for your wealth. They are optimizing for their commission. The truth is simple. In 2026, for most Americans, renting and investing beats buying and borrowing. The math is clear. The data is undeniable. And the financial industry is terrified you will figure it out. If this information changed how you see homeownership, subscribe to the Wealth Clock. We expose the systems designed to keep you poor. Next video, I am breaking down the 401k scam and why your retirement account is making someone else rich. You need to see this before you contribute another dollar.